This introductory video will help you get started so that you can make the most of your opportunities in the market. Before we start, it's important to understand that there is no magic formula. There are many paths to success, and it doesn't matter which one you choose, only that you are comfortable and confident in your trading plan. Slower, larger swing trades and faster, smaller day trades balance out, so don't feel pressure to force a style of trading which may not fit to your schedule, skill level, or risk tolerance. Stress is the enemy, not the market. Whether you're a seasoned trader or brand new to the market, there's always value in giving yourself a fresh start. If you are already actively trading, feel free to incorporate any of the following into your trading. Let's walk through how to get set up so that you can start participating in the market. The first step is to open a broker account so that you can actually place orders and trade. There are plenty of options out there. If you're in the US, 3 of the most popular brokers for newer traders are Webull, Thinkorswim, and Robinhood. They're all ultimately fairly similar in what they offer, but be sure to look into them and choose the one that fits you best. For this video, we will be using Webull. Once you have a broker account, you can log in and see all kinds of tools, widgets, data charts, and may be tempted to start pushing buttons and trading. This is probably one of the most dangerous times of your trading career, and it's usually best to not trade until you understand what you're seeing. Remember, we prefer to trade what we know and study what we don't know. While you're focused on learning and aren't yet able to find your own trading opportunities, the alerts provided by us in the alert feed are a great alternative to get some practice as well as make some profit, or as I say, make some bread. Keep in mind that all trading involves risk, and you should always do your own research and only trade what you can identify. In order to access the alert feed, you can go to pbalerts.com and log in. Once you're logged in, you will see a link in the top right corner which says alerts. Click on that to visit the alert feed. This is an example of one of the alerts. They are separated by instrument, meaning stocks, options, and crypto, as well as by type, which are day trades, swings, and so on. This alert here is a stock swing alert. On the right side, we can see the current chart. This is for reference and should always be analyzed by yourself before entering a trade. If you click on the chart, you will be brought to the FinViz page for that stock so that you can see other factors such as float, the company's debt, news articles, and more. On this alert, you can also see which analyst alerted it, the date, and time, as well as a list of all the updates that have been posted for that alert. On the left side, you will see the entry price. It is usually safer to enter a trade at or below this price, but not below the stop loss. This is to ensure that we have a greater than 1-to-1 risk to reward and that our losses should outweigh our wins. The stop loss is the price at which we typically want to exit the position for a small loss. Between the entry and stop loss, you will see 2 targets. These are levels at which we typically sell part of our position. Most traders prefer to sell about 75% of their holdings at the first target to ensure they lock in the bulk of their profits, leaving the remaining 25% to attempt to reach target 2. However, there may be an update posted when the alert hits target, indicating that the analyst does not feel confident that it will hit target 2, and they may lock in their entire position. Ultimately, it depends on your own analysis and risk tolerance. If you look near the top of the alert feed, you will see a green button labeled Alert Feed Settings. If you click that, a box will appear with several options. In this settings pop-up, we can set up filters for the alert feed in order to only see what fits our trading plan. If you're on a smaller account, for example, you may want to omit alerts, which have an entry price of a few $100s. You may also want to only see 1 or 2 types of trades, such as swings or growth trades. You might want to filter out certain analysts as well. You click on the blue drop down, which is labeled alerts per page. You can adjust the number of alerts which appear under each page. If you are on a slower connection or an older computer or browser, you may want to keep this number relatively low. It is set to 5 by default. Lastly, on the alert feed page, there are a few controls below that settings button. The most prominent is the search box. In order to look something up, simply type in the box. What you type into the box is applied to the entire alert. So if you're just looking for trades by ticker, you may want to put them in double quotes. If you want to look at an alert based on whether or not it was a free alert, for example, you can use quote free unquote as the search term. You will also see that there are 3 buttons for stocks, options, and crypto between the search box and the alerts themselves. If you want to see stocks, click stocks, options for options, and crypto for crypto. Now that you can navigate around the alerts feed and set up your filters, it's time to build a watch list. Keep in mind that the alerts feed is a pool of potential trade opportunities, and nobody should try to trade them all. We publish many alerts because we have a large community comprised of different types of traders, but each trader should only be focused on a small handful of alerts in order to not get overwhelmed. Once you filter your alerts feed and are seeing alerts you might like, let's go ahead and create a watch list in Webull and add tickers to it if we like them. Let's go through one alert at a time and see if it fits our criteria. The criteria is going to be different for each trader, but there are some pretty general rules that we can follow to help make the process easier. First and foremost, can we afford it? If you are on a $500 account and decide to use $50 per trade, and the entry price is $129, you might want to consider not adding that one to your watch list, since one share would immediately cause you to over allocate. One more piece of criteria we can consider is to look at the sector each ticker is in. If your portfolio is 90% small cap biotechs, you're going to have a lot high risk trades and will likely struggle. A stable, diversified portfolio is generally easier to manage, so we prefer not to overload it into any one sector, especially while we're new. If you click the chart on the alert feed and go to FinViz, it'll show you the sector and industry that company is a part of. Lastly, how many positions do we have? If you are loaded up and have 10 positions in your portfolio, that is going to be a lot of work to keep track of all of them. That leaves a lot of room for surprises, errors, and impulse. We can reduce those risks by not taking on too many positions at once. Most newer traders prefer to only grab 2 or 3 alerts at a time. Remember, the focus should be on trading the trade all the way through, successfully, and letting the profits come to us, rather than focusing on just hitting targets regardless of what we're seeing on the chart. In Webull, when you add these tickers to your watch list, it is also beneficial to draw the lines at the respective price levels for entry, stop loss, and targets right on the chart. You can also copy the original alert from the alert feed and paste it into the notes widget, along with any other pieces of information you discover about the company. You can also set alerts for when these prices are hit. Your watch list does not have to be 2 or 3 tickers. It can and should be fairly diversified in order to provide more consistent opportunities. 15 to 20 tickers might be a good number to maintain at the most for new traders. As the alerts hit targets or stop out, you will want to remove them from your watch list and add new ones which fit your criteria as they're alerted. This is why we don't want to commit to a huge number of alerts to track and manage. At this point, you can build your watch list and start to identify potential trades for you to take, but we're not quite ready yet. We still need to consider how much we're going to commit to each trade and whether or not they're worth it for our trading plan. A relatively safe way to allocate funds for trading is to break your portfolio into 10 slots and assign 10% of your portfolio around to each slot. That means that if you're using a $500 account, each slot would be $50. When you open a position on a stock, that occupies that slot. Some traders may consider fewer, larger positions, and some may consider simply keeping the bulk of their cash on the side while they focus on learning. There are no wrong answers, but the overall goal is to avoid being washed out of the market before you've had a chance to learn and put the education into practice and find success. Don't be part of the 90% of traders that quit. You are on a margin account with less than $25,000. You are subject to the PDT rule, which means that you can only have 3 day trades in effect at any given time. When you buy and sell a stock or sell and then buy within the same day, that is 1 day trade. It takes 5 trading days for that day trade status to wear off, and you can have 3 of those at any one time. However, if you exceed it, you'll be labeled a pattern day trader and may face restrictions. Most swing traders use margin accounts and don't care about day trades as much. For swing trades, most traders use larger positions and manage them over the course of days to weeks, sometimes even months. If you're on a cash account, you aren't subject to the PDT rule, but you're only allowed to sell positions you've opened with settled funds. When you close a position, it takes time for those funds to settle into your account. Stocks take T+2 trading days. Options typically settle the next trading day. You open a new position on unsettled funds and then close it before those funds have settled, you may receive a good faith violation. Webull has a nice warning system built in to let you know, but it's always best to track it on your own just to be safe. These violations last longer and tend to be more severe, which is why we're teaching you about them now, because the market loves to remind us that we don't know what we don't know. When you've built a watch list, research the companies and made notes for upcoming catalysts and other important information, and analyze a chart and determined you're ready for a trade, and you decided how much money you're going to commit to that trade, well, we need to actually execute the trade. But how? We use orders. For the sake of keeping things simple, there are generally 2 types of orders we can use: market and limit. When you place a market order, it is added to the market immediately and fills at the next available price, regardless of what that price is. When you place a limit order, it only fills at that price or better. This means that if we want our order to get filled right now, no matter what, we would use a market order. And when we can be a little more selective and choose our price and aren't as concerned with whether or not we get filled immediately, we can use a limit order. Of course, there are nuances to each scenario. Education courses is much more informative about each of these topics, but for now, a market or limit order is enough to get started with. One example would be to place a market buy order to open the position immediately, and then set a limit sell order at the target, which will get filled if and when the prices get to that level. That allows us to focus on other things outside of the market. One final piece of the process that we can implement is to take notes. It is often overlooked, but ultimately allows us to study ourselves and our trading just the same as we study a chart, so that we can identify our own personal support and resistance levels, as well as our own patterns. We try to encourage traders to take notes describing what they're seeing for the trade and what they're basing their decisions on, in an effort to force them to slow down and justify those trades with objective criteria. Another component of note-taking should be our own assessment of our environment and emotions while we're trading. If we are hungry, upset, in a noisy environment, or ill, for example, we may be experiencing more stress than usual, and that will have an impact on our trading. Being aware and able to track these things can help us identify obstacles within our trading so that we can work around them. Paper trading is another phenomenal tool that we can use to gain experience and develop our skill set without needing to risk real money in the open market. Many traders initially dismiss this as a viable option because they are in a rush to make cash profits, but typically revert to paper trading after experiencing losses and frustration on their own trades. Our number 1 job as traders is to always manage our risk exposure, and if we can, eliminate it while gaining experience. That is an incredible return on that investment of time. We can also trim our profit out of our portfolio once we hit a growth goal to keep the positions within familiar ranges and gradually increase them over time as we develop our skills. If we grow a $500 account to a $2,500 account, for example, and lose $1,500, we will still be net positive. But we would not have needed to take that loss if we secured those profits and continued trading with a familiar account in the first place. There was a lot of information in this video, so please feel free to rewatch it as many times as you like. Learning to trade is just like learning any other skill. There's a strong temptation to want to be perfect and to make a fortune over a short amount of time. But if we take unhealthy risks, we are likely going to hurt ourselves more often than not. There are no shortcuts when it comes to trading, but that doesn't mean it's impossible or that it even has to be difficult or complicated. Trading should be stress-free and boring, because that's when we think the most clearly. We are here to help you along the way, so please feel free to ask any questions that you may have, and be sure to continue to learn over time. Education is a force multiplier for your capital. You've worked hard for your money. Let's get you to the point where your money works for you. Thank you for watching this video. I hope to see you in PB Alert soon, but until then, as always, I hope that you all make some bread.